a stronger strategy going forward to support the property sector, or are you happy to trade on that now?
Well, that's the catalyst for Chinese equities to rebound, the integral catalyst. At this moment in time, if nothing is done, it's probably going to trade around the current level.
Good morning, everybody. The futures are pretty much in the red and the pre-market is not looking very good. So let's talk about what's currently happening. And this is kind of a follow-up to my video yesterday about where the markets are heading, but also Alibaba earnings. And I will talk about my personal views in here. And if you're new to the channel, welcome. Here we discuss Chinese equities with a particular focus on the EV sector and NIO. And if you're also a Patreon member, then shout out to you. You guys keep this channel alive and independent. I really appreciate it. By the way, you can also become a Patreon member. Along with 300 investors, we discuss daily the news in our network. Just go to patreon.com/dongxi and sign up and you'll get an invite to the network. Now today on the main page of Bloomberg, we've got Biden fears China is a ticking time bomb. By the way, there are many inaccuracies in this article. So we can see again with this chatter here by the analysts that everybody is waiting for the Chinese party to issue stimulus to help the economy, especially in the real estate sector, and that's not looking very great. We've got new data coming out this morning. For example, July social finance data was absolutely concerning, according to this analyst on Twitter. Also, Shanghai macroeconomist, who's really pretty spot on, also said there is worrying development today with lower than expected new bank loans. So as I said yesterday, people don't have the confidence currently. There's not much investing by businesses and taking out loans. But in general, I think investors are looking to old data in an old-fashioned paradigm. They're watching the real estate sector, they're watching the bank loan sector and so on, and they're seeking this old growth pattern that is stimulated by big investments in infrastructure by the Chinese state and also by stimulus from the leaders here. And I think that's not going to happen. And also looking at this chart here about the bank loans, you know, this author here is pointing out that it's now at an all-time low for a couple of years now. But I would actually argue that isn't the more worrying thing that we actually have these huge spikes here up and down, up and down. Isn't that really what the Communist Party sees as a structural issue to the Chinese economy, that there is too much leverage and up and down movement in an unsustainable fashion for the economy, and therefore currently that the fact that they are not stimulating, I think, is a sign that they don't think that the economy is as bad in a shape as many read it to be. Instead, they already have shifted to a different growth model and they don't want to further along help the real estate sector. Will we see some sort of help for this real estate sector? Yes, absolutely. I think they will put out fires. I think they will come to rescue if things are going to collapse, but I don't think that they will jump again on this sort of a thing as a growth model. And investors should ask, like, where is the money actually flowing? And I can answer it. It's going to green tech, green development. It's going to sustainable development. It's going to high tech like chips and artificial intelligence, manufacturing 4.0, those type of things that have a better quality and help to the society and added value overall. These will be now in focus instead of the real estate market, which I think will be switched as an asset class against the stock market. So I think we will see more and more support from policymakers for the ordinary individual, but also not just the working class, seeing incentives to invest something like to similar like a 401k. And so we will see a prop up of the stock market over time. That's where I personally think the future lies. And now with Alibaba earnings out, you can see like this was a very, very good earnings report, like with increases 14% year over year, 70% year over year. I mean, this report is full of year-over-year increases and it's beating investor expectations all across the board, and that for a huge undervalued big company like Alibaba, which is a big indicator for the whole Chinese economy. And by the way, I've got good news. Thomas agreed to get back here on the channel and tell us more about his views about Alibaba. I know he's a big Alibaba bull, so it will be interesting to see his views. And so in general, my message here is, while the news is all doomy and gloomy and investors are waiting for stimulus, I think smart and savvy investors already now stop thinking in old terms and see where the money and the music will be playing in the future. And that is in investments that I've just outlined before. So that's my views about the pre-market today, about what's moving the stock prices here and the macro views about the Chinese economy. Let me know your views down in the comments below. Thanks for watching and see you in my next video.